Good morning, traders. Today is June the 3rd, 2021. My name is Devil Hornsey, market analyst at YouTrading, and today I'll mostly be talking about the euro versus the US dollar. All right, first of all, I'm going to start with the YouTrading heat map, and you can see that the US dollar is stronger against all the other currencies apart from the British pound, and the euro is also stronger against most of the currencies apart from Chinese yuan, British pound, and obviously the US dollar. So they're kind of both doing well today, and that is going to lead to a balanced market, essentially. If we turn to the dollar index first, you can see here that we're at 2021 lows. This is like a support zone. Tomorrow, we're waiting for 645,000 jobs at least to be created in the NFP. Generally, if market sees that the jobs number is better than expected, then that's supposed to be good for the currency. Here you can see back in May, we had a disappointment of 266,000 jobs being created for NFP, and the US dollar did actually collapse down towards this support zone. However, back in April, we had 916,000 jobs, which beat expectations. And unfortunately, that still wasn't good enough for the market to keep the US dollar going. We had inflation worries, we had all sorts of other stuff. But generally, we came up to this consolidation zone, which we talked about, found the middle of it, and then collapsed back down. Back in January 2021, we actually lost 140,000 jobs. And even though February wasn't great, there has been obviously an uptick in job creation. So fingers crossed that can carry on. And as long as we get a good number, or like a really good number or a really bad number, this dollar index should actually start moving away from the $90 level, because at the moment it's kind of pinned since like mid-May. So turning to the euro versus US dollar, you can see here that we're sort of compressing under the 122 level. The 20-day, the 50, and the 200 period moving average are all stacked bullishly. So we've got momentum to the upside. If you move back to last year, I think it is, so June 2020, that's when we had the 50 cross over the 200-day period moving average, and that's the golden cross. So we've been in a bullish momentum ever since then. On the weekly chart, you can see that we haven't made a new weekly low for several weeks now, since beginning of May. So that's also bullish. Price action wise, we are making higher highs and higher lows. So from the low of 2020 to the high of 2021, we did actually have a pullback. It came back almost to the tick, 38.2% of the Fibonacci retracement. And that in itself is a very bullish momentum indicator. So if we can get above this 122 sort of compression at the moment, then we should be looking to go a lot higher. Now, for an extension, if I go to the Fibonacci extension tool, so extensions, so we'd be looking from the low to the high to the pullback, and then a measured move would actually take us up to the 1.34 sort of level, which on a monthly chart is back up towards the 2014 sort of period, which would be quite extraordinary. However, if we go to the other monthly chart, here I've got us compressing underneath this swing low from both the 2010 and 2012 lows. We did test that period before, back in 2018, and that's where we find ourselves now. So there's obviously a lot of support which acted as resistance, and now we're just looking for a lot more bullishness to come into the sort of eurozone. The euro area I've wrote here did actually shrink 0.6% in the first part of 2021. So that's not great, but then we have had lockdowns due to coronavirus. The inflation is accelerating to 2%, and that sort of shows that the economy is growing, which is great, but it will give the ECB some sort of worries if this euro should appreciate too quickly. However, in May, the manufacturing PMI did actually increase, which is good news for euro manufacturing, especially Germany. And today we learned that the services PMI, which was obviously really affected due to the coronavirus. That's actually accelerating at the strongest pace since 2018. So that's good news for the euro area too. Obviously, momentum is building. The 20, the 50, and the 200 period moving average on this monthly chart are stacked bullish. And yeah, we are looking likely, if we can get above May's high, we should attack January's high, and then yeah, maybe we go up to the period of time we saw back in 2014. All right. So we're going to look for some decent data out of the US or a complete disappointment, and then hopefully get some movement for the Euro USD tomorrow. All right, take care, and I'll speak to you then.